With the housing inventory slightly increasing, mortgage rates increasing slowly, mortgage applications decreasing, days on markets are increasing. The question is, are we seeing the housing market making a correction? Federal Housing Financing Agency is expecting the prices to decrease by 5% by end of 2022. Personally, as a realtor, I am seeing increasing in inventory and the number of offers receiving on my listings has decreased drastically from the first quarter of 2021. Good morning. My name is Rupa Nampally, realtor with Remax 1. In this episode, I will ask you, my audience, a question. Are the home prices cooling off? Post your comments below. Joel Kahn, MBA's Associate Vice President of Economic and Industry Forecasting, said in a statement that mortgage applications decreased 4% for the week ending July 16th, just 1 week after applications jumped 16% on the strength of falling mortgage rates. The 30-year fixed rate increased slightly to 3.11% after 2 weeks of decline. 15-year fixed loan rate decreased to 2.46%. He also added that on a seasonally adjusted basis, compared to the July 4th holiday week, purchase applications dipped back to near their lowest level since May 2020. Limited inventory and higher prices are keeping some prospective home buyers out of the market. Refinance activity fell over the week, but because rates have stayed relatively low, the pace of applications was close to its highest level since early May 2021. Mortgage applications for new home purchases in June decreased 3% from May and 23.8% year-over-year, suggesting a slowdown in the housing market, according to the recent report from Mortgage Bankers Association. A new single-family home sales were reported at a seasonally adjusted annual rate of 704,000 units in June, a decrease of 5% from May's pace of 741,000. The MBA estimates there were 66,000 new home sales in June, down from 68,000 sales in May. As per Joel Kahn, overall sales of new homes are still down 7% from last year. 2020 was the strongest year in the housing market for new home sales in over a decade. Right now, home builders are encountering stronger headwinds as severe price increases for key building materials, rising regulatory costs, and labor shortages impact their ability to increase the production. This has dampened new home sales and quickened home price growth. Still, levels for sale inventory are also pushing prices higher as competition for available units remains high among prospective buyers. In addition to price increases, we are also seeing fewer purchase transactions in the lower price tiers as more of these potential buyers are being priced out of the market, further exerting upward pressure on the loan balances. Homes for sale are still being snatched up quickly throughout the country, but a recent slowdown in bidding wars may signal some buyers' fatigue in the housing market. Redfin reported recently that 65% of the home offers written by companies' agent in June faced competition, down from a rate of 72.1% in May and a peak of 74.1% in April. New listings are also up 4% year-over-year, meaning more properties are hitting the housing market for buyers to bid on. According to a new Redfin study released, home sales fell 1.2% from May to June, the largest drop at this time of the year on record since at least 2012. The national median home sales price hit a record high of $386,888, up 25% year-over-year but a slight decline from record of 26% in May. The number of homes for sale fell 28% year-over-year from 2020, and the typical home sold in just 14 days, a record low and down from 39 days in June 2020. According to Daryl Fairweather, chief economist for Redfin, said, "In June, we entered a new phase of housing market. Home sales are starting to stall because prices have increased beyond what many buyers can afford. This summer, I expect home prices to stabilize as more homeowners list their homes, realizing they likely won't fetch a higher price by waiting longer to sell." 56% of homes sold above list price, another record high, up from 27% a year ago. And the average sale to list ratio hit 102.6% in June, meaning homes are selling on average 2.6% above the asking price. Economists at Fannie Mae are again sounding warnings that rising rents and record home price appreciations could contribute to long-lasting inflation that leads to earlier, more aggressive tightening by the Federal Reserve. But homebuilders may yet save the day as supply chain constraints and labor shortages ease. More new homes should start coming on the market. That could encourage homeowners who wants to trade up to put their homes on the market, boosting of sales of both new and existing homes and slowing the pace of price increases. In the latest economic and housing forecast, Fannie Mae economists say that after adjusting for seasonal factors, they expect the pace of sales to pick up in the last 3 months of 2021 and the first 3 months of 2022. Fannie Mae Deputy Economist Mark Killam said in a statement that as demand for homes eases and more homes come on the market, that should cool price appreciation. While recent home price growth has been historically high, we are forecasting further home price appreciation to moderate through the remainder of the year and into 2022. We think home builders will be able to increase productions as supply chain disruptions and labor shortages elevate, which should add to the inventory of new existing homes available for sale. For now, home price appreciation keeps setting new records. According to the Federal Housing Finance Agency's Purchase Only Index, home prices were up 15.7% in April from a year ago, the fastest annual growth in records dating to 1991. Fannie Mae economists say they now believe home price appreciation peaked at 17.9% during the second quarter of this year and will gradually decelerate over the next year and a half, averaging 5.1% during the fourth quarter of 2022. Home prices have peaked. What goes up must come down. By end of 2022, we might be seeing a 5% decrease in home prices. Bidding wars might be coming to an end. Inventory will be hitting the market. When this happens, supply and demand comes into play and prices will decrease. If you want to maximize your home equity, now is the time. Call me at 732-397-9185 and together we can explore the options of selling your home. Have a nice day.